And,
Right.
and so one of the ways that you'll be able to utilize um, a strategy and invest in the fund is a strategy using your IRA to invest. And I'm going to take a little break here for a second, and I'm going to let that kind of soak in. So, just to give you again a background, today we're going to be talking about some strategies on how you can unlock more access to investments. And so, one of those vehicles is going to be using your IRA. And how can you use your IRA or 401k? And there's a lot of other retirement vehicles that are eligible, but we'll just use these kind of as our overarching um, names or nomenclature that we're going to use today, and that's going to be your IRA or your 401k. All right. So first off, if you're not familiar on how to do that and how you can do that's what we're going to learn today. And so there are distinct benefits, and you could also pay attention to some of our follow-up webinars where we had a chance to actually sit down and interview um, a gentleman from Equity Trust, John Bowens specifically. And John is a incredible expert in this field, doing it for multiple decades. And he's got just so much power and knowledge when it comes to unlocking your IRA to invest with that. And so let's talk about that a little bit. So the benefits. So benefits of using your IRA to invest is that you can control your investments. There's a tax advantage. There's a diverse investment options such as, and we'll talk about those. But your investments, they grow tax deferred or tax free, and so it's like compounding tax free investing. And so John Bones gets into a lot of this at Equity Trust, is that how you could really empower yourself and empower your IRA by simply using a self-directed IRA account and then being able to direct, exactly as it sounds, self-direct, right? So you could be in charge of. So what happens today is that right now you may have a 401k and it may be with a company like Fidelity or Charles Schwab. And they just simply don't have the mechanisms or plumbing or interest in necessarily allowing you to execute an alternative investment with your IRA. It's not to say that it's prohibited. It's just something that they do not, they're not good at, and they don't have infrastructure to let you do that with. So what we're doing today is we're letting you, giving you insight on how to gain that control over your IRA and be able to self direct some of it. And keep in mind, one of the things that it's not about going and liquidating your IRA and then just, running for an investment. No, it's still, you have to think about how you're going to balance your investments, but you may want to explore other things outside of what has been already pre-vetted by your institution. And so what I mean by that is that normally is that there's already securities that have been pre-vetted that you can buy, offerings that are available to the entire public cohort, whoever is signed up at Vanguard or any IRA company where you may have your IRA with. And so it does not allow you today to just go and buy real estate with that or invest in real estate. But what you can do without any penalty or without any type of negative repercussions is that you could take a portion of your IRA or a portion that you're interested in investing into real estate and diversify into alternative investments, into alternative assets. So again, these are common assets in the market, whether it's oil and gas, ETFs, real estate, crypto, but you can invest into that using your IRA or your 401k by simply opening up a self-directed custodian account, self-directed IRA account through Equity Trust. There are some risks obviously associated with that. And so some of the, there's some liquidity restraints. So it's not as liquid as maybe a stock when you go into alternative investments. But also your investment horizons are a little bit different and your investment focus is different. So that should align right in tune with how your portfolio is being balanced because, right, you need liquidity and illiquid assets within your portfolio to really be able to tether true balance And in order to balance your portfolio and have a healthy portfolio with the appropriate amount of diversification in it, you're going to want to have some control. And in order to have some control, you're going to need a custodian account through Equity Trust. And so John Bowens at Equity Trust calls this a universal IRA. And the reason it's called a universal IRA is you can still buy stocks with it. You can still go buy mutual funds with it. Just all it does is it gives you direct access to the money. Now, you can't take any of the money without penalties, but you can invest the money without penalties. You can get returns. You can't get the returns physically in your hands, but you could put them back in the IRA. And so that gets back to investing grows tax deferred or tax free, and how that can compound and what that compounding effect looks like. And it's huge. It's a big effect. Okay. The next thing is this requires a lot of compliance, regulatory compliance. So when we're talking about using your IRA to invest with, you can't just go really self-manage it yourself. I mean, there are a lot of rules in place, but you want somebody like a Smartland that can help you just identify the investment, allocate to the investment, and then oversee and make sure that we are in line with the IRS policies and rules. And that way you are operating in compliance without any type of regulatory risk. So there's a bonus. As I said, you're going to save on custodian fees through Equity Trust. We have a special partnership, Smartland Equity Trust Company partnership, where you get a bonus on saving on your custodian fees when you invest using your IRA. All right. So we covered my introduction. We covered a little bit about Smartland. We covered the power of your IRA, right? Like not everybody has immediate liquidity, but you have liquidity capacity in your IRA to go and tether and take advantage of what we're about to talk about right now. And so why right now is the right time to invest. So getting off the sidelines, taking your capital off the sidelines. We've all been keeping it on the sidelines. Now it's time to execute on that capital. And so what does that mean? Right? Like, what does that mean getting off the sidelines? Like, where are we going when we get off the sidelines? Okay. So for the last few years and leading up to today, you may have even heard and keep hearing terms like commercial backed security, or you may hear the acronym CMBS, commercial backed security. What is it? It's just a mortgage. Okay. What kind of mortgage is it? It's a mortgage that has been securitized and trades on an open market basis. What does that mean, Steve? Okay. So it gets traded like a stock. Okay. It's somewhere out there on the exchange in some sort of bond or in some sort of package or in some sort of REIT or some sort of trust. And it's out in the open market. It's been securitized and people are trading these notes. And why are people trading these notes? Okay, well, people like Smartland owner operators over the last few years that were acquiring multifamily properties used a variety of debt products to buy this multifamily buildings. Okay, so some of them are regular debt mortgages, just like how you went to the bank. They're not commercial backed securities, so they're not public in the public forum. They're just in a private forum. They may just be regular debt from a small lender or a regular lender. And then you have the next one, which is commercial backed securities that are traded, they're securitized, they're in the public markets. Okay, why is all this important? Well, if you've been following the market, you've seen that there's been a radical hike in interest rates, not in the amount of the interest rate, but in the velocity and the speed at which the interest rates went up at. That is much different from just approaching or heading to a higher interest rate market. So when you're heading somewhere, you can set a course and a map and expectations. When it's presented to you, you have to address it as such at face value. And so today, interest rates need to just be addressed at face value, because if you purchase something, if you're an owner operator and you purchased a multifamily asset in the last 2 to 4 years, and it happens to be that you used a commercial mortgage-backed security, okay? and maybe you're coming up due, or maybe you bought with a regular mortgage, not even a commercial backed security. Maybe you just bought with a regular mortgage and it's coming due today and you have to refinance it. Well, a lot of operators are being kind of caught a little bit off guard because number one, rent softened over the last 18 months. A lot of business plans for acquisition. We're considering a nonstop, perpetual increase in rents, a continuum of rental increases. That's not happening. A lot of purchasers and buyers did not anticipate such a high velocity of interest rate hikes. So that is putting them under financial distress. A lot of operators were not expecting that cap rates would be grossly impacted due to higher interest rates. Again, that is not what's happening. And so when you take all three of those instances and you begin to put them underneath a microscope, you begin to identify that there's a lot of operators that are dealing with a very, very tough situation. And how did we get to this information? Well, we got through CMBS. Why through CMBS? Okay, well, here we're going to get to the meat. CMBS, because it's a publicly based public security, is under constant monitoring. And so we access some special software here at our office at Smartland, at corporate. Our underwriters and our strategists are always using the best of the best, or trying to use the best of the best knowledge-based software to identify opportunity. So we are what we would lend to as opportunists. We're looking to buy at the best possible, not only rate, but outcome for our investors. And to do that, you have to buy low. And so what we're looking at CMBS data on operators that are either delinquent, default, or in physical financial distress. And so we're able to surgically really identify whom and where those opportunities are. And those opportunities are abound today. And they're only coming to the market faster and faster. And those opportunities are just better basis for purchasing. And better basis for purchasing puts us at a much more advantageous position to be able to identify not only good deals today, but good exit strategies for the future. That's why it's so important to couple our money together today. If you're an accredited investor and you're on this call, that's why you need to get off the sidelines. We've all been on the sidelines watching for this to materialize, and this is where we're headed. So we need now access to capital, all of us together, to be able to execute on very good and repriced assets. That's so critical. Okay, so our future projections are real simple. There's a potential inflection point with easing rate volatility or not. And so what we see is that a lot of operators were holding off, hoping that Q2, at the onset of Q2 2024, we would start seeing some of this easing, projected easing. However, we are not seeing that. And now we're anticipating that that's not going to happen maybe through the first few quarters of 25. And so that just means that there's more opportunities to buy. And so that's really important that we all really classify this as more opportunities to buy, because this is where you begin to really think about segmenting yourself of being a market mover alongside us at Smartland, or just sitting on the sidelines. And for what some people would call, I've heard economists use the words of like trying to catch falling knives. So one thing that we're not going to be doing here at Smartland is we're not trying to catch falling knives. We've been watching and monitoring the market very closely. And so for us, this is showing all the signals are there now to begin buying. And if you look at the headlines, you also see some of the major operators are also back in the market and buying. Okay. Whew, that was a lot, huh? All right, so we covered a little bit about a little bit of our background, a little bit of history, a little bit of IRA, how you should be investing today. If you're not investing using your IRA or 401k, you could get discounted custodian fees using our discount code that we're going to show you later at the end of this presentation. Um, and why you should get off the sidelines and invest today in Smartlands Fund, why we should all be buying real estate today together, outside of all the other things that we know about it, the appreciation, depreciation schedules, tax benefits, growth over time, it being a real asset. Um, you know, aside, if we put all those things aside and we just focus on, hey, look, when opportunity is open, that's when we strike, right? And a lot of times you're seeing a lot of fear um, in this type of marketplace. And so what we know about fear is that when others are fearful of buying, this is the time for us. This is the opportunity for us to go and buy. Okay, so there is a new market cycle, and we've been on a lot of calls with a lot of our clients, new coming clients, incoming clients, past clients, current clients, about market cycles. And so, as I mentioned to you, I'm Stephen Gesis, CEO at Smartland. And so I have been personally at Smartland for over 12 years. This will be our third market cycle that I've been present for. And we're going to highlight what number one and number two were. So, number one was the single family residential fallout, the great financial crisis that we all witnessed coming out of 06, 07, 08, 10, 11. And that was all poised around single family residential. That whole market was completely obliterated. They got completely knocked out. The opportunity then was to go buy a lot of single family residential. And that's exactly what we did. We did that then, and we were inviting investors to participate alongside us. And those investors that did participate alongside us, we are mutually happy and we are mutually satisfied with those transactions, I would say, if not more. And hindsight 2020, that classic statement that we all know, we really need to focus in on that, because we don't need to be the guys murmuring hindsight 2020. We have foresight, we have market data, market knowledge to be able to make really good, insightful decisions and thoughtful decisions on potential investments. And again, keep in mind, as I said, any type of past performance is not indicative of future performance. However, there's still historical data and historical knowledge that we do track, and that is important to highlight and understand. That way, we can execute on futuristic deals. Okay, old market versus new market. So the old marketplace, so we got out of single family residentials, and as single family residentials were beginning to kind of move on, that market cycle had shifted now into multifamily value add. And that market was actually pretty strong, and it's been strong for like a decade, almost untouched. Okay, and so a lot of lending into that vintage market. People, we were able to go buy 50s, 60s vintage assets and do very heavy value adds. So we could buy something for $7 million with a bridge loan from a lender for $4 million, 50 or more percent of purchase price that needed to be rehabbed, and go out and increase value through heavy value add, heavy increase. And so as the market cycle has shifted now, lenders have pulled back, middle market lenders have pulled back, and a lot of that has to do with what we just talked about, CMBS and lending to a multitude of lenders, operators on vintage heavy value add. And so a lot of business plans included value add, renovation, increased rents, sell. Okay. And on the far cycle of those plans, if you were in 23 or 24, you probably were buying somewhere towards the top at that point. Rents were already kind of trending very high, and interest rates were still keen, not too high, and business plans were still being kind of maneuvered. What had happened is now banks filled up on these heavy value adds. A lot of operators are not fulfilling their business plan. Either they didn't renovate all the units in a timely manner, or they can't get the units renovated, or they ran out of money to renovate them, or they ran over budget to renovate them. Rents went a little flat. So we've enjoyed rents going high. Rents went a little flat, so they've stabilized. And so if you're an operator that was banking on a very specific type of execution of your business plan for your heavy value add, you may be stuck. And that's where the opportunity is for Smartland and its partners that are on this call today, or partners that are thinking about participating with us, is that those guys are in duress. They're in financial distress. And so the new market is a little bit different. Still real estate, still multifamily. However, in order to get debt in this new market, most lenders, they're kind of filled up on this vintage product, waiting for it to come full cycle at this point. And so new product, anything new that we're buying, our team is targeting newer vintage 90s, 80s vintage product. So things that were built in the 80s, things that were built more newer in the 90s. We're also targeting, instead of a very heavy value add strategy, it's still a value add strategy, but maybe a little bit slower, a little bit not as heavy. Heavy means we're coming in there and we're renovating like all the units right from go. Value add means that we're renovating units as they materialize and matriculate through an organic unit turn process. So people are moving out, we're modernizing units. People are moving out, we're modernizing units. And so what this gives us an advantage on is that usually we're buying something a little bit more stable. So it's 90% occupied, has more cash flow available to it. And so that's important because that speaks to what's going into the fund and what today's new market looks like. Most importantly, if you gather anything from this webinar, is that we are buying assets at a discount in the market now. Our team is hunting every day for deals. And we're not only hunting for deals, deals are being brought to our team from our marketplace of lenders, our marketplace of brokers. But I mean, this is something that we have all been waiting for from an opportunity standpoint in an effort to start buying again. Okay. Just to give you a really great sampling, and you may have gotten this in your emails. If you're on this call, you may have gotten an email. And the kind of this call is a summary of maybe all the emails that you've seen in the last 2 weeks, but we really wanted to put some context behind it. What's on the screen right now? All right, we have a map or a graphic of the 2008 Great Recession versus 2023's Fed slays inflation. And I love that, Fed slays inflation. So when we were, what I said, I've been here for 12 years, so I've seen now, I'm on my third market cycle. When we were in the 08 market cycle, you can see the trending on nominal cap rates and pricing was 30% down. I mean, that's where we're from the peak. I mean, that's the trend, right? Today, we're already seeing multifamily asset opportunities at 30 or 35% discount to what it was yesterday. So almost 2020 prices in 2024. That's the rollback we're talking about, right? So if you look at these data sheets, you'll see how far prices went and how down we're going, and kind of where we think we are today. And that gets back to we're not catching knives. So is this the bottom or close to? Yeah, we're getting close. It's buy season. Got to act now. Okay, how can we act? I'm going to tell you how. We have a fund, Smartland launched on April 1st of 2024, that focuses specifically on multifamily, like 90% multifamily, a little bit of industrial, a little bit of single family, so maybe 5% in each of those buckets. It's a commercial real estate acquisition strategy. It's all about growth and income. The target fund size, we are raising together with our accredited investor partners $250 million for our real estate fund. It's Smartland Strategic Real Estate Fund. It's not our first fund, as I mentioned before. We've gone full cycle on other deals. Our plan is to go and purchase up to $750 million worth of real estate. It's not a lot of real estate. It sounds like a very big number, but real estate, as you know, it adds up very quickly. And so this is a very sizable purchase. However, it's something within the confines and context of our team's capacity. And that's really important because I think that what you've seen over the last few years, and if you've been following us or you're following other operators, it's all about team capacity. So not overloading yourself on what it is that you're good at and being able to execute then on what it is that you're good at. The hold period for this fund is 5 years and 2 times 2.5 year potential extensions. So it can lead up to 10 years, but at the current rate, the hold period is 5 years. We have 2 distinct classes of investment. We have Class A at $1 million or more, and we have Class B at $1 million or less with a minimum of $100,000. Both classes achieve a 16% IRR. However, Class A does get a little bit of a bonus. So if you're $1 million or more investor, you're going to get a 70% profit share post IRR. And if you're at Class B, you're still going to get a very bountiful share at 50% profit share after the IRR. Now, why is that important? Because there's a third class, Class C. Class C is Smartland General Partner, okay? And Class C gets paid last, pari passu, after everybody else, Class A and Class B, achieves their thresholds. Okay, what do you get with investing with a group like Smartland and Smartland's strategic real estate fund? You get professional management, you get strategic capital expenditure, smart tech, and modern units, right? The ideal sauce in order to catapult these investments, add value to them, increase value, and increase their worth. Where are we doing this, right? So our fund focusing on Ohio, North Carolina, South Carolina, as well as the great state of Florida. And we're in a multitude of states, not only for geographic, we're in 4 states and up to 5, not only because we believe in what's available from an opportunity standpoint, but there's great demographic growth in all these states. And based on our data, we know that some of our best hunting grounds for best deals are in these 4 states. And so, and we have a few more, as I mentioned, but based on all of our data and all of our statistical analysis and analytics that we run internally, what we see is the greatest opportunity will be coming from this demographic or geographic spread. Okay, here we go. I've bored you guys long enough. You learned about the IRA investing, how to do it. You got to get a custodian, self-directed IRA account. How do you get one? You can call Smartland. You can text us. I'll share the details on there. We can open up a self-directed IRA account for you right at Smartland on Equity Trust platform. We have an amazing partnership with them that allows us to open accounts right over the phone with you, or right by text with you, or by email. And that allows you to take advantage of the reduced custodian fees. It's not for everybody. It's just if you're a Smartland client, you can get reduced custodian fees through Equity Trust. Okay, asset number 1. We are under contract and we are moving to close. So if you're still on the sidelines and you're still thinking about it, time is now, act now, invest now, use your IRA, use your 401k, you could use your cash accounts, your checking, your savings, whatever it is. You can invest now into the fund. Don't be late to the party. Don't give us the hindsight 2020 conversation. There is a late penalty entry fee if you do come in late into our fund. So it is important to move now into the fund. As I said, there is a penalty for coming in late. We can get into the details offline about that. Asset number 1 is a 90s vintage, 55 plus community that's almost 100% occupied, cash flowing immediately. The business case here for the acquisition of this asset, number 1, strategic price point. The price point for this asset is going to be in the 2020 price point metric. So it's going to hit our checkbox on basis and cost of acquisition. Vintage, it's a 90s vintage asset. It's going to hit our checkbox on acquisition for vintage. Occupancy, it's over 95% occupied. It's going to hit our checkbox for buying and acquiring on occupancy. So this specific strategic real estate fund is focused on buying stabilized or stable assets or occupied assets, but under financial distress. Okay. And that's the opportunity. And this is the major opportunity coming off the sidelines to participate, is being able to buy alongside us discounted assets. Okay, and as I said, so the first asset, it's a 90s vintage. It's based out of the Cleveland market. It's a 55 plus community. It's fully booked, so it's occupied, cash flowing today. So we'll be able to produce returns right for the fund right away. So it's a good value buy, value prop for the buy. And we're buying low, and our plan is going to be to sell high. Okay, so I'm going to show, I want to really show off what our team has done. Thank you to our marketing team, Matt, Caitlin, Victor, and the whole gang behind them. Thank you to our leasing and marketing and management team that make this effort real every day and help us keep these places occupied. So this is Canton. This is a sample of an asset that we purchased. It's 90 units, purchased it about 2 years ago, modernized it, occupied it. And so this would be a sample type of asset that you can expect that this fund that you're going to be participating in, that you're going to be investing in today. This is the type of assets that it would be purchasing. Miami Beach, an asset out of Miami Beach. Actually, we successfully purchased and sold this asset last year out of our fund, and we successfully purchased it at a low basis. So we bought low and sold high. Another asset out of Miami Beach, another sample asset that you can expect to see in the fund or the fund acquiring, whether it's a small 12, 15, 20 unit or it's a 50, 100 unit asset. The goal is going to be still to buy it, modernize it, add the value. What you've seen in these last 3 slides is you kind of see our little signature, if you pay attention, all along. The new baseboards, the new paint quality, the new cabinets, the new kitchens, so the new lighting effects. And you can see how we carry that message all the way through. That's part of our DNA here at Smartland, is not just to buy something, but to buy it and make it better. Okay. I'm going to accelerate this so we don't hold everybody up this afternoon. But another asset example here is our Shorewood Towers that we purchased also about 2 years ago, modernized it. And at this point, we're working on rent stabilizations. But again, you can see some of our signature here as well. So we've increased the value through common amenity modernizations, whether it's the common area lobby or it's the units themselves. It's all under the same strategic plan, as increased value over time. Garfield 131, again, you'll see our signature here carry through, both on quality of product as well as what our modernized units look like and kind of what the expectation should be if you're participating in the fund, what the units would look like throughout the investment cycle. Another asset here out of Columbus, Ohio. Again, you'll see our signature product, our signature on this product here as well. Similar wall colors, baseboards, flooring, new bathrooms, new kitchens. So again, very common theme that you'll find with us. And that's really important to highlight because that's what we really are known for, is this kind of even keel, standard product delivery, standard product in the marketplace. So it's a branded product. People know it's a Smartland branded product. When they get to the Smartland property, they can recognize that it's a Smartland product, that it was done the Smartland way. You have the Smartland kitchen, the Smartland bathroom, the Smartland living room. And so you can really see how that resonates throughout the entire project. And here's another one. It's almost the exact replica. And that also speaks to our consistency in our delivery. And so we're really believe in that forward model, as we've talked in prior examples and prior webinars over the years, of stamping a very similar product. So you're getting a high quality, known product, and consumers, whether they're in Cleveland or they're in Columbus, they're in Florida, in Miami, they know the consistency of the Smartland product. They know if they're going to go to a Smartland badged building, that they're going to get a Smartland consistent product. Another example here, they just keep coming, of 150 plus unit asset. This is a little bit older vintage asset that we're actually still in progress on. However, you'll still see those same signature elements, those same Smartland signature elements carried throughout, whether it's the flooring, the baseboards, the paint, the bathroom. Again, it's going to be the Smartland way all the way through. It's going to be a Smartland bathroom, a Smartland kitchen. And that's really important as we manage assets, because then also our clients have an expectation of what is the Smartland way. And if that's already a predefined and predetermined vehicle, it makes this experience, both not only for investors, but also our residents, that much more high quality. All right. I told you there'd be a bonus at the end. If you use the discount code, I know it's not that exciting or special or secretive, but if you use the discount code Smartland on Equity Trust's website, or we can use that code for you, you're going to be able to get that bonus savings on your self-directed IRA account. You can also text IRA to 847-721-7555. All right, I'm not going to hold you up anymore, but you could text IRA if you want to use your IRA or open a self-directed account to 847-721-7555, and our team will help you use your IRA or 401k to unlock investing power, unlock some of those tax benefits, unlock that compounding tax-free growth through your IRA. Give yourself a little bit more handle on your investments. Be able to diversify outside of your scheduled securities that's already pre-vetted and predefined for you. Be able to expand that investment horizon for you. Be able to build wealth for you. And again, keep in mind is that everything that we've discussed today is for educational purposes. None of it is forward-looking data, should not be relied upon future results. And we thank you so much for spending the afternoon with us. Normally we have a Q&A. Feel free, ask some questions. We'll leave it open. A lot of folks like to send us an email with questions, and we'll send all the participants a follow-up and information on not only how to participate, but also utilizing the code and being able to ask more questions from us. But again, keep in mind, you're investing with an established business. We've been here through now, this is our third market cycle, specifically when it deals with rental. And we look forward to partnering with you. Get off those sidelines, invest your money today. Time has come. We're not waiting for those knives. We're not catching knives. Deals are in the market, and we're offering you this foresight today, so you don't have to have hindsight 2020. We can all do it together now. Again, thank you very much, and I'll be signing it off. Stephen Gesis with Smartland. We hope you have a wonderful afternoon and have a great day.